all Five Below, FIVE. They've thrown a tremendous amount at this stock, and look how it's held in. It's actually gone up in earnings, which a lot of stocks have not done, and it's just been an absolute champ. So a tip of the hat to you. I'd love to have you go through, why you bought it initially and the ensuing buys. But what a homer for all of our members.
Well, thank you.
I have
It's funny because you were actually before you mentioned that you were looking at this chart. I was actually, I was just going to mention it briefly today, because I had sort of a timely but very qualitative thought. So, um, this is a stock that I attended. I think it was maybe the first analyst day that they'd done in a long time in 2022, and I was so impressed by the company. And I bought some. I'd been following it since the IPO, but it had always been a little too rich for my blood. I definitely leaned to more, the value in GARP names. And I was so impressed by both their merchandising and their operations and sourcing that I decided, and, it was always a great story because this is one of the only growth retailers left in America that's growing, at the time, square footage, number of stores by like 15% a year. And they were comping positive. So you had like a 20% grower between comps and, new stores and operating leverage, 20% plus. To find that kind of compounder in retail in America, very rare. So everybody was crowding into this stock because it's such a rare beast in the retail area, a true growth company. It was never really cheap enough for me, but I bought it in 2022, probably in 140s, 150s, on its way to north of 200. And, something I've been working on in the last 5 years is trying to hold my winners, right? Because I am by nature contrarian. I'm always willing to step into the breach. And there have been a lot of like 10 baggers that I turned into three baggers, right? By, buying them when they were totally out of favor and then selling them, when they recovered to a reasonable valuation. But then they went on to like an inflated valuation and also, grew earnings, beyond what anyone had imagined. So I'm trying to get better on not selling too early. In this case, it hurt me because the company made some missteps that were totally self-inflicted. Operational stuff, like they cut labor too much in the stores. They sort of rested on their laurels too much on marketing and didn't bring enough on merchandising. I apologize, and not bringing enough new merchandise, new merchants, new merchandise into the store. So they got a little lazy. They got a little greedy on the cost side with cutting labor, but kind of totally fixable things like the merchandising issues. The merchants were mostly still there. So it's not like the people who had created the magic had gone away. But when they went from just knocking it out of the park to a rare period of them for negative comps, the company lost 2/3 of their value. And so that goes back to kind of late 2024, early 2025, where it got in to the 70s. And that's where I doubled my position, kind of mid 70s. And that's when I think I had mentioned it, on the way down. I kind of caught the falling knife and said it's maybe time to inch in. But then when it got to the 70s, that's when I doubled my position. And then it went to the 60s. And then I, brought it up again by another 50%, but essentially tripling that initial position down near the lows, which I think were around $56. So anyway, was pounding the table in the 60s and 70s. I think I sold a little bit when it doubled, like maybe like 25% or 30% when it doubled, but I've held the rest. And, it's
Good
getting
for
to the
you.
point where it's fairly valued now. And I was thinking, okay, should I trim this? Because it is one of my largest positions. But then qualitatively, something's happened in the last week or two that makes me think that there's going to be another leg here. And that is, and this might be familiar to anyone who has teens, tweens, or even kids in their 20s around. There is a trend building in stress balls, basically. I'm calling this the second coming of the fidget spinners. And there's a company called Needoh, which unfortunately is privately owned. Otherwise, we'd have a stock for you. Needoh. And if you go on like Instagram or TikTok, you'll see a million videos of people searching toy stores, Target, Walmart, Amazon, CVS, Walgreens, in search of these squishy things, which were priced $15, right? And you cannot find these. Like if you they're putting limits on them on Amazon, they're selling at, a store that has a $12 MSRP is selling at $60 on Amazon. We're talking 5 times markups. It's basically, this year's Labubu is these Neatos. But no one can get them, and it's spread into fidget toys of all types. So people want these squeezy balls and shapes and whatever, and it's not just kids, it's going up into young adults. And Five Below, this is the kind of trend where they lean hard. And so I think, a lot of people have been wondering, how are they going to comp, such a strong year last year. But it's been proven in the past. Fidget spinners, was a good example of that for them, where these kind of trends drive incredible traffic into the store because people are looking for the sort of off-brand Neatos, the other kinds of squish stress toys. And so they're going to be checking their Five Below regularly to see what they have. And I've already started getting on my Facebook and my Instagram ads from Five Below that they've got, dumplings and bears and cows and whatever in the squid. They're chasing this. And so, if, as an example, I went to a Dollar Tree this weekend. I never go to a Dollar Tree. I went to a Dollar Tree because we were searching for squish toys. So this is, every mom in America who's trying to put together an Easter basket is familiar with this phenomenon right now. And so I think this is going to be a traffic driver for at least the next 6 months for Five Below. And the fact that it's hard to stay in stock, people are hunting them. It's driving trips. So I think there's another leg here. This stock is, kind of trading 17, 18 times 25 EBITDA, 15 times next year's. But I think we have a 15 to 20% grower. So, it's not crazy. And, it used to trade in the 20s on this multiple. So, it's more mature than it was when it was traded at that multiple before, but it's by no means sure. So, as I said, I sold that, 20, 30% of it, 100 points ago. I'm not selling anymore right now.
Let me draw this for you. This is the all time high back in August of 21, 237.86, and look how the market is paying its respects to that level right now. So you had earnings that were great. The fact that the relative strength line, look at this thing, is incredible given the we've thrown tariffs and $110 oil at this name, and this is how it responds, which I think is incredible. So you should probably spend some time under this 237 level for a while. But if you're right, and the stress balls trend goes through Christmas, there's no reason why this can't tack on more upside from here. And so for our members, if you're keeping score at home, that's roughly a triple from the 70s in the span of 2 years from Berna. So good for you.
And just on $100 oil, I would just say that is a double-edged sword. Clearly a lot of things are made from plastics here. It is a inflationary factor for them. It's an inflationary factor on the utilities, on freight, all those things. Although, this is the low-cost provider in the market for things like